Thanks, Chrissy. It's a pleasure to be here presenting on Rocks Resources at the RIU Sydney conference once again. Uh, we will kick off. There we go. I draw your attention to the disclaimers, in particular the JORC compliance and forward-looking statements. So, Rocks is a West Australian focused gold explorer and developer with two projects, the You and Me Gold Project near Mount Magnet in Western Australia, and the Mount Eureka Gold Project, which is up near Jundee, also in Western Australia. The You and Me Gold Project is our most advanced project and we consider a near-term producer. It has a high-grade, large gold resource, so 3.2 million ounces at 3.6 grams, and importantly, that includes an underground component of 2.2 million ounces at almost 7 grams. The resource is currently sitting at 41% in indicated category, so that's the category of higher confidence that you can convert into a reserve. And a large task for us over the coming 6 to 9 months is to get more of that 3.2 million ounces into the indicated and measured categories. The resource remains open along strike and down dip, so there's ongoing growth likely. However, we're all about increasing the confidence and bringing that resource to fruition. The Mount Fisher project is earlier stage. That's in a remote greenstone belt on the edge of the Yilgarn Craton, and we recently announced some exceptional results from a prospect in the Mount Fisher belt called the Damsel prospect. Where we intersected 16 metres at 7 grams in the middle of a 7 kilometre long gold anomaly. So based on the resource at You and Me, Rocks is trading at $27 per ounce in terms of enterprise value, which is a very compelling valuation and an attractive entry price compared to the sector. So Rocks' strategy is to add value through exploration and development and returning. We have historical producing assets, and we're applying modern exploration technologies to those assets, and finding ounces and growing those resource base. We will be putting out our scoping study in the middle of this year on You and Me, with a full feasibility study in the first quarter of next year. So 2 key milestones to look out for there. We're also looking at early cash flow opportunities. We're very mindful of dilution. And there are outcrops and gold sticking out of the ground at You and Me, and there are lots of hungry mills nearby. So just turning to the vital corporate information of Rocks. So there's 169 million shares on issue, trades at around 40 cents at the moment, which gives us a market cap of $68 million. We have 6.9 million in cash at the end of the March quarter, so we're funded for our short-term activities. We have around 22% institutional ownership, and we try and lift that when we can. And we're strongly supported by Hawke's Point, a very technically focused fund out of London, with 13%. The board is made up of Stephen Dennis, myself and John Mayer, and we're supported by an experienced management team in Chris Hunt, Matt Antill and Gregor Bennett. So this team has been progressing our scoping studies and feasibility studies, understanding the financing options that are available to us, and we're in early stage discussions with various financiers, and Gregor and his team are doing an exceptional job growing the resource base. So just checking in where Rock sits in terms of the sector. So I think the bubbles on here aren't showing very clearly, so I apologise for that. So this is a bubble chart showing enterprise value per attributable resource ounce across comparable companies to us. And so the vertical axis is ranking the companies on the basis of EV per ounce, so that is the price that an investor is paying per ounce. The bubble size, which I apologise is not clear, is the size of the resource. And then the horizontal axis is the resource grade, which you could use as a proxy for the quality of the resource. So what I'd point out is that Rocks is very much along the horizontal axis, so a high quality and large resource, and yet is trading at a compelling valuation, i.e. is low down on that vertical axis, which we think won't be the case for very long. You've heard plenty of companies at the conference talk about ESG. It's very much a gate opener for plenty of institutional investors, and something that we all are starting starting to turn our minds to in a very serious way. So ROX has several goals in 2022 in terms of ESG. We'll be producing our first sustainability insert into our annual report this year. We have a very active ESG framework to roll out this year, and it is an important aspect of financing, an important aspect for the sector. So turning to UNME in a little bit more detail. So UNME sits 140 kilometres by road to the southeast of Mount Magnet. Mount Magnet is a gold producing area owned by Ramelius. We own the project in a 70-30 joint venture with a company called Venus Metals. It's a past producer, produced over 500,000 ounces from open pits and undergrounds, and closed in 1997 when the gold price was 450 an ounce. So obviously with the gold price at 2,600 Aussie an ounce, the prospects for this operation are vastly improved. We've also added significantly to the resource base at UNME, which underpins a restart scenario. There's some existing infrastructure in place, and the most valuable of the infrastructure that we have in place is the decline, which was put in 1997, which goes to 600 metres below surface. So that decline is not backfilled, it's just filled with water. So once we dewater that, we can use that as a drilling platform to then grow our underground resource. As previously mentioned, we've got 3.2 million ounces at 3.6 grams, and the deeper part of that is likely to grow. Right. Let's check I'm on the right slide. Yep. So just turning to the mineral resource in a little bit more detail. So we split our resource into near surface, which is likely to be mined by open pits. So that's from the surface down to 160 metres vertically. That's at 1.75 grams, and we will see a large component of that convert into open pit shells, and that will be published in our scoping study in June this year. The underground resource of 2.2 million ounces at almost 7 grams is a stellar resource if you compare that across the sector, and that will likely optimise very well into mining shapes underground. We've seen strong growth in our resource. So when we acquired the project, we had 1.2 million ounces. We've now grown it to 3.2. We've been discovering new ounces for around $7 per ounce in terms of exploration cost, and that compares very favourably to the sector. And that growth has come from along strike extensions and parallel structures that weren't previously recognised. So genuinely new discoveries and good additions to the resource base. Importantly, that the growth in resources has added ounces in key areas where we're likely to be mining. So that improves the prospects of the development. So looking in a little bit more detail at what the resource looks like. So we can see here these two large blocks of colour. You probably can't see the legend from up the back, so I'll read it out to you. So the blue and green and yellow in the more shallow areas is the near surface resource. So that's the average 1.75. And the warmer colours, the higher grade colours in the underground, so that starts at 160 metres below surface and goes to actually 1,000 metres, but the bulk of the ounces are down to around 750 metres below surface, and that averages 7 grams per tonne. So you can see there's a high grade shoot component, so northerly plunging shoots, and we've had a lot of success following those shoots down and adding ounces to the resource. So looking at ounces per vertical metre, which is a key metric that you need to look at in terms of early stage developments for gold projects. So we have 4,000 ounces per vertical metre in the near surface resource and 2,900 ounces per vertical metre in the underground resource. So that is a very that's indicative of a commercial development in our view. Just on the metallurgy at UNME, so the near surface resource is all oxide and free milling. Nature's sort of done our job there and for us, and all the sulphide. So UNME is a sulphide replacement style ore body, and the near surface resource has been oxidised, and that's readily processable through a normal CIL plant. And then the underground resource is still in its fresh rock state, so it's still a sulphide ore body. 75% of the gold in that ore body is easy to get out, and the last 25% is a little bit more difficult. So we need to use slightly more advanced oxidation techniques. But we've chosen a process called the Albion process for our test work, and that shows that we get 92.2% recovery from the sulfide ore body. So there are solutions for that, for the slight quirks in this ore body. So this slide deals with that in a bit more detail, but the main thing to note from this slide is historically the operation used to achieve 33% sulfur oxidation, and they'd get 95% of the gold out. So that is indicative of it not being too tricky to get out. So in terms of a conceptual flow sheet, the oxide material we see going straight to CIL, and then crush, grind and float sulfides to make a sulfide concentrate that is very high grade. That then gets ultrafine goes through an ultrafine grinding circuit and then goes into an oxidation circuit in CIL. So there's just an additional step there. But when you're dealing with such high grade material, 7 or 8 gram type mining grades, that those extra steps aren't on much material and they don't cost so much per ounce. In terms of the infrastructure we have available, we have a good existing camp and call shed and a good spot for the geologists and the technical team to work, and that's important in terms of attracting people at the moment in Western Australia with the labour market very tight. But there are also lots of other things that give us a real head start in terms of development. So airstrips there, bore fields there. It's a disturbed site, so approvals are a bit easier. So just reflecting on on our progress over the last year or so, we've drilled 50,000 metres. We've taken the resource from 1.2 to 3.2 million ounces. We've been discovering those ounces for $7 per ounce. We've built out our management team, and we're getting ready to develop the mine. So looking forward, our resource development drilling will focus on the inferred to indicated categories, particularly above 500 metres depth. So that's the important parts of the resource that we will be tackling first. So that's our job for the next 6 months. Looking further afield from you and me, there is significant regional upside. We have 80 kilometres of strike across the belt, and we're also actively exploring regionally. So in terms of next steps at you and me, we've delivered substantial resource growth. We don't see that slowing down, but we are moving to that development study phase. I'll just really quickly touch on the Mount Fisher, Mount Eureka Gold Project, which is over near Jundee. We have a joint venture here with Cullen Resources. We hold about 850 square kilometres in the belt, around 500 square kilometres in our own right, and 350 with Cullen. It's a greenstone belt, Archean lode gold. It's very prospective for Archean lode gold. Here's a close-up shot of the belt. We recently reported very high grades from a structural corridor in the southwest corner of that belt, so in a prospect called the Damsel Prospect. So there's a 7 kilometre long gold in regolith anomaly here above 0.2 of a gram. And in the middle of it, we've hit 18 metres at 7 grams per tonne, including 10 metres at 10 grams per tonne. So it's a spectacular result in the middle of nowhere, and hasn't had any serious work done on it since the 1990s. So we're excited about this prospect further out. And with that, I will say thank you for your time. Is it? Yes.
Did you want to round that out, or are you happy with that?